Hello everyone, TGIF. How are you guys doing? Is everything fine? Can you see my screen? As I see, everything should be working well. Uh, you can hear my voice. If someone can just please confirm into the chat boxes. Either you are watching this on YouTube or TradingView. Everything seems okay. Okay, we will wait a few more minutes and then we will start with the session. Hey, Omid, welcome here. Okay, so once again, thank you to joining our webinar. It's not Monday because usually we had webinars on Monday. However, I was away on Monday, so we decided to do it this Friday. Also, the market somehow, the FX market did not really move much a few days back. Now, finally, we are seeing some volatility, so maybe it's not a bad idea actually that we waited a few more days. So, like each time, I will walk you through some of the major markets. Mostly, we'll look obviously on the FX, but as well on some other correlated markets because we know that a lot of assets are important to track. But you know what they say: if you have dollar right, you have everything right. However, those correlations were recently, some of them were recently lost. But I still think we have pretty interesting developments. We have seen some nice dollar turn over the last 24 hours. Especially dollar strength is visible versus commodity currencies. So I think it could be pretty interesting next week. As you know, Aussie and Kiwi, those have formed some failure breakouts earlier this week. So we will look on all of those charts a little bit later. So we will start with the euro dollar. Now, I've been tracking discount for a while and I'm still tracking it. Is I think that we have bottomed here in 2022 with the 5 waves up, and we are now in a consolidation phase. So I am expecting, my primary view is, and has been for the last almost more than a month, is that we are in a flat correction. That's a 3 wave correction where wave B can move to a new high. And so far this has occurred. And notice that what I really like about this is that this wave B is somehow overlapping, okay, with its substructure. And also this move to a new high wasn't really did not actually last long. We are already coming back to the downside. So we either completed wave B and you will see a wave C drop in a flat back to the area of a former wave A, and then you will see a bounce higher, or maybe this high here, okay, is actually can be actually wave 5, okay, as I will show you on this next slide. Okay, it could be also end of a wave 5 and you will see a 3 wave correction. So this one is also very valid and important count in my opinion. Especially this could send prices much lower if we broke this channel. Okay, so watch out for potential weakness on the euro, either as I said for a wave C, very sharp drop as a flat, or potentially we could be seeing an ABC correction here back to the wave 4 and then rally. So in either case, I still think that longer term we have bottomed here, we will be headed higher, but after or from lower prices. You also had seen some divergence here, which is very common at the end of the trend, so I'm really not surprised by this current reversal. However, on the intraday chart, we don't really have this very clear bearish impulse yet. We have so far 3 waves to the downside, okay? But notice what is happening today. We are breaking the lower trend line support. So it looks like that this weakness could resume and could potentially even become an extended third wave. And then we would have quite important evidences that top has been reached. Okay, if suddenly, let's say, we rally by the end of the day and we close somewhere around 107.70 or something, then I think that still another potential high is possible. But this will not change my overall outlook here, which in my opinion still suggests that we are only in a temporary rise from March lows. Why I think that this could be actually reversing lower is also because we have overall dollar strength visible. It's really interesting that even cable has seen a reversal to the downside yesterday, despite the hawkish Bank of England. Hello, good afternoon. So, despite this very hawkish Bank of England, we still have seen weakness on cable in favor of the US dollar, and most likely this has come because, as you know, this inflation is still a global problem, and if Fed will stick with their hiking policy, then obviously this will have the most impact on the US dollar, and so will drag the other currency to the downside. So maybe that's something that it's behind the recent sell-off on cable, despite this hawkish Bank of England, or maybe speculators are just losing optimism here that Bank of England will maybe finally win this inflation. Keep in mind that inflation there is still above 10%, most compared to other countries. So we definitely would actually expect that prices would be much higher on cable, but if that's not the case after the hawkish comments, then when this currency will be higher is what I'm wondering. So I think that euro could potentially see more weakness, could potentially be dragged lower, but overall dollar strength. So if we look at cable, since we talked about it, here I'm looking at 5 waves up. We've been tracking this for a while. We said that resistance is around 126 to 127, then even higher is 129, 1.3. But keep in mind that we are currently trying to see some spike here, okay, that goes back to this level from exactly from a year back, May 2022. So we erased all of the losses since then, and now looks like that we are trying to fail here once again. So I would not be surprised to see this new consolidation phase, simply because we can count 5 waves up, and even within this 5th wave we can count 5 subwaves. Looking closely here, that's a wave 1, wave 2, could be wave 3, not really perfect count, I know, but this still could be wave 4 triangle and then wave 5. Not the ideal, not the perfect substructure, subdivision here for a wave 5, but normally when that's the case, in this 5th wave, it's when you don't have any clear subdivisions. Well, that's another indication that bulls are losing strength, because otherwise you will have a very clear subdivision like within a wave 3. So whenever that's not the case, because wave 5, as you know, can also have overlaps because of expanding or diagonal triangles, and normally this activity, this poor price action with overlaps, actually suggests that bulls are losing strength. More importantly, we are seeing some very aggressive reversal after we discovered this ending diagonal pattern. We also posted and talked about this a lot. We've been tracking this one closely, and so far even this sell-off occurred after hawkish Bank of England, as I said. Now, it's still, the most important is that you pay attention on today's closing prices. So today it's Friday, And if prices will stay here at current levels or potentially even extend even lower, then I think more weakness will be seen next week. This to me already looks like a very small impulse here. And since we know that maybe that's ending diagonal already finished, then we can see a reversal back to the starting point of that pattern. And the starting point was right here at 136. So I think that if on Friday today we will see here closing price around current levels or even lower, I think after a bounce there can be opportunities on the short side towards this level, while the market obviously should stay below 2680, okay, because that's invalidation level. If we think that market has found a top here, you definitely want to see that this top will stay in place, obviously. Also, let me look from curiosity, I want to look at these candlestick formations here. So far we had some very nice doji here at the top, then a bearish engulfing, very strong bearish pressure. So again, if we will see a continuation lower today during the US hours, or maybe just will keep chopping around here on the intraday basis, I still think that more weakness will be seen. So as long as we have this long red bear candle in place, I think that bears are in control, okay, even if just temporary. Here it's the weekly, obviously not closed yet, but still so far looks very, very promising. Also here above was 100 weekly moving averages. Also looks like the market is failing to break here. So again, we could be seeing a corrective stage finally if we will see a bearish close. We had a very nice green candle so far. So if this one will show up now, then of course this would be another signal that we are in a corrective stage. So I would be even looking for potential shorts here on cable next week after a rally, if we really are going to see this current bearish pressure still in play by the end of the day. Okay. Now let's take a look also on Aussie. So as I said, commodity currencies are weak, and I really like how Aussie dollar is making this reversal. Now, to give you the full perspective on Aussie, just be aware that I'm still thinking that pair has bottomed here in October 2022, and we will see a continuation higher. But if we are in a corrective phase, then we know that this correction should be made by 3 waves. So far, this looks like only wave A, and now you are in consolidation. Just compare the recent sell-off here from the start of the year, that lag, okay, to the current price action. That was a very strong move. That's a slow move. So it looks like a correction. So based on these Elliott wave guidelines, I would anticipate that market will revisit these 2023 lows. Also, even more important are subdivisions on a smaller time frame. Looking here, you can see that from that low, we have very nice overlapping recovery, right? You cannot count this in impulsive fashion. And afterwards, we have seen very strong drop, but still only in 3 waves and not to a new low. That's a key, not to a new low. Because always, even if you maybe thought that here was the end of correction, then the whole correction should be fully retraced, meaning you would expect that price will reach this level. But since the following drop was only in 3 waves, we knew that this is most likely part of a complex correction, either a triangle or a flat. And looks like that flat has unfolded because of very nice 5 sub waves up in wave C. And in flats, which by the way I can demonstrate here, okay, so you have 3 waves up for wave A, then 3 waves down for a wave B, and then 5 waves recovery for a wave C back to this ending point of wave A before market turns back to the downside. So you will see market clearing plenty of stops here at that level. And what I like so far is not that we just have seen a reversal, but that this reversal is a very strong one. And again, it could remain bearish if we will see today on Friday close around current levels or even lower. So that would be another indication that this rise in the middle of the week towards this new high here with a spike that was, I believe, on May 10th was only temporary. Okay, so bulls saw a failure here, and if bears are much stronger at the end of the week, then obviously I would be expecting more weakness. So even this one could be very interesting for shorts while the market is trading below that level. But of course, you maybe want to wait some pullbacks first. Also, looking at some correlated markets here. Here we have Chinese yuan. You can see very bearish price action. So this obviously comes in line with Aussie. Keep in mind that there was inflation in China reported was a little bit too low than expected this week, so no economic activity, and obviously this has an impact on Aussie. And if you take a look also on copper prices, you can also see a very strong drop. Looks like ongoing bearish impulse as well. So I would be very, very careful here, especially if maybe stocks will suddenly just maybe move to the downside or just stick in the range. You could still see more weakness on Aussie, because obviously Aussie and stocks somehow lost correlations lately. Okay, and also you have gold as well, and silver especially, seeing some weakness. So this is all what matters for dollar to stay strong versus the commodity currencies. Now, if we take a look on Kiwi, you can see that, let me just, okay, you can see on Kiwi that we are tracking this ongoing correction. It's just a temporary pullback, but even those corrections, since we're tracking on a daily chart, of course, they can take a long time till they are finished. But more importantly, there was a 5-wave movement here, very strong bullish reversal from 2022 low. So again, I think that was an important level, important bounce, and that we will see a continuation higher. But again, after a 3-wave of retracement, because 3 subwaves represents a correction. So I still think that we are in this corrective phase, but we will be anticipating the next impulse when this correction phase is finished. Very nice support is the 61.8% and the 50%. Okay, that comes in around 60 psychological level as well. So I think that this one could be seen in the next few months, and maybe we will even see some thin trading conditions for summer, and then all of those commodity currencies could finally move to the upside, maybe in the second half of this year. Also, when I will be expecting that maybe cryptos, stock market as well will move to the upside, because I believe that in a few months we will have a lot more clearer message and picture of what the Fed is really trying to do with rates. Will they stay in hold? Will they raise more? So I think that's going to be the key. But looking here at the intraday subdivisions, very nice 3-wave recovery. I really love how this recent price action played out. Only temporary spike to new high, perfect for a flats, and now reversing lower. That's a very strong sell-off. So I'm thinking that, again, rally in 3 waves, minor ones, could be opportunity on the short side. Even if we will just keep ranking here between big levels, 60.80 and 63.80, I still think that there can be opportunity on the short side, because that's only one leg to the downside. So if you think that this will be a correction, you still would expect ABC drop. So we know where our invalidation level is, the short one, the short term, definitely here. Okay, so as long as this level holds, I think that Kiwi is in a downtrend. Also, the reason for this drop on Kiwi recently was probably the expectations for inflation for 1 and 2 years had decreased to 4.28 and 2.8%. And as you know, Bank of New Zealand was one of the first banks who actually surprised with the rate hike, but then looks like that they could be maybe even, who knows, the first one who will slow down. So we'll see how this will all unfold, but from a technical perspective, clearly to me looks like the pair wants to continue lower. Now let's take a look also on dollar yen. So dollar yen, just okay. So dollar yen, nothing has really changed. I mean, market is chopping around here, and unfortunately, this, in my opinion, will take longer than we thought, because looks like that we could be dealing with a complex correction. But still, looking at to give it here maybe even better, looking at this price action, I mean, this clearly looks like a top, this looks like a correction, and these corrections obviously will try to confuse traders. So more complex it will be, more longer will take time to unfold, more tricky will be to follow. But the important is that we know where are invalidation levels, and that from time to time, when we have a very complex structures, unclear direction, a smaller time frame, that we make a step back and look where the big picture is. Okay, and clearly I think that because of this very strong sell-off last year, I think that we will continue to the downside. But of course, this may take time before this will really materialize. Also, one of the reasons why this currency pair is just chopping around is obviously because it's not clear what the Fed will do, and then you have Bank of Japan, who is fine with the current policy, so they are not going to, for now, make any changes, and that's why obviously this market could be trading both-sided. From an Elliott wave perspective, when looking at this price action, there are two scenarios possible. First is that you are here in a triangle for a wave B. Okay, so in a triangle, each leg will have corrective subdivisions, right? So you will see this one either in 3 waves or in 7 swings, like in our case, but it was an overlapping decline. Then this was a 3-wave movement, and if we think we are in a triangle now in a subwave C, well, then this one should be also made by 3 waves. So far, that was only one leg to the downside, and looks like that we are now in a minor consolidation here for a wave B. So I think that more weakness there could be seen next week. Okay, I'm not sure if this will come from Japanese yen strength or from dollar weakness, or it will have an impact from the US yields, who knows. But what I'm looking at here, it looks like that this resistance could stay in place for a while we will be chopping around. But I'm thinking about the retest of the lower trend line here. Also, you have the 61.8% projection right here around 132.60, which is actually from a wave A measured from end of a wave B. Okay, so that's the fib level that we should track whenever we are looking for subdivisions within a triangle. And I like the fact that this could be the next stopping point around 132, 132.50, because as I said, we also have this trend line. Another potential scenario is, let me hide this one, is that we are here in a bearish triangle, right? And that the whole price action from January will be a triangle. But even this one obviously should have all legs in 3 waves. And again, even if we think we are in a wave D then of a bearish triangle, you still need another leg to the downside. So again, this one will also be on my list for potential trades next week. Okay, I also think that, again, this, even if just short-term weakness, still there can be some room for further weakness. But overall, looking at a higher degree picture, even if that's a triangle in the wave B or wave B of B, whatever, I think that more weakness should be seen based on this higher degree chart. Okay. Also, here is interesting point. We are looking here at yen futures, and you can see how yen futures came back and filled this contract gap here that was back in March 08, before dollar yen moved higher. And then we again have seen a very similar price action. By the way, we track this very closely. We have seen a very similar price action here at the start of May, okay, when also price filled this another contract gap, and we are responding to the upside. So I'm wondering if maybe we are already in the new, this, even if just short-term bullish cycle, this is another indication why potentially dollar yen could see more weakness towards 132, as I said, even if just short-term. Okay. Now let's take a look on the 10-year US notes. Okay, so this market is sideways for the last few weeks, but more sideways will be, more stronger can be the breakout. Okay, so I still think that even this whole recovery will be corrective, that this recovery is incomplete. This was a very nice recovery in 5 waves, sharp wave B, and new bounce higher, but now later on after that, that's a key actually. This sharp move to the upside was not reversed by sharp drop, but instead we are seeing a consolidation. So this consolidation, this actually shows me that it just a pause before market will see another shot up. So I'm thinking that this wave C could resume to even higher prices, and that's, as you know, bond markets obviously globally are connected. So even if you look at the 10-year US notes, you can see here very similar situation, not exact the same obviously, but also looks like the bottom has formed with this wedge formation, and now we are testing this major trend line resistance, which in my opinion should be broken, because now again, if you're familiar with the Elliott wave principle, then I'm sure that you will see this as an impulse, and this drop has been made by 3 waves, and now we are testing this trend line. So we have wedge, we had a bullish reversal, we had a broken wedge resistance line, and we stopped at a temporary black trend line, in my opinion, which could be taken out. So even this one, of course, suggests higher prices. Now, maybe some will think, now, how will this impact the euro? Well, actually, it's all going to be defined by rate differential between the US and the Europe. So that's what will define the next moves. But I think that here wave C to the upside could be seen, and will be looking for this as long as we are trading above that low. Okay. Now, if we take a look also not only on the 10-year US notes, but also I have here it's the TLT. Again, I think we have a pretty nice price action here, looking higher for more gains. But even if maybe I'm trying to adjust maybe the wave count here a little bit, this could even be a triangle here. Okay, but again, you will expect a break to the upside. Okay, so that's obviously TLT. But here it's also good to look at the 2-year US yields. Notice a very strong reversal here from a new high, and this looks like that US yields are headed lower. Now you are just consolidating here. Again, expecting more weakness, meaning that prices could see more gains. Okay, so all of this, if of course yields would come to the downside, this will most likely also have a bearish impact on dollar yen. Okay. Hello everyone, can you do a dollar Turkish lira Elliott wave count for me? Yes, actually we posted this one on Twitter, but I will look in a little bit later, no problem. Okay, now what I have on the list here, let's take a look on crude. Well, crude has played some nasty price action. As you know, I've been tracking crude oil very closely for the last, and so far quite well for the last few months. But then I thought that we are bottoming here on March 20, and that we will be headed already higher for a wave B correction because of this OPEC who decided to cut the production because they saw the activity slowing down. So obviously they want to make stable prices. But what we learned from here is that after this gap higher, after this production cut announcement was of course supportive for crude, but falling prices a few weeks later is, in my opinion, just another indication how many times actions like this from institutions are effective only for temporary period of time. It's something similar like with currency interventions by central banks. So any decisions could be only short-lived. So maybe this final move to the downside could really be final of this higher degree bearish sequence, because it was quite unexpected, I must say. So we have seen a spike to a new low very close to these very big support levels that I defined as a potentially pivot level for this year. So I'm still thinking that recovery could be in the cards. Now looking here at more short-term structure, let's go to the 1 hour. Okay, so here we have potentially 5 waves up, and now we have a correction going on. So usually when I'm looking for a correction, I want to see minimum retracements for the 38.2%. We came quite close, I must say, so I would not be surprised if we see straight move to the upside, or maybe just something more complex here and then higher, because if dollar will remain strong, then obviously this could put some bearish pressure or very strong resistance in play for this, for crude oil as well. But overall, as long as we are trading above that level, we know we are wrong with this wave count. I will be expecting more upside. I'm looking for this triangle pivot 75.30, which goes back here to this minor triangle. Okay, so that would be my minimum upward objective probably next week. And with this kind of approach, I was looking for potential more weakness on dollar CAD. Fortunately, this one is rallying now, but still, if this one is really going to break higher, and if FX will somehow trying to follow the crude, then obviously CAD, NOK, Mexican peso could still see more strength, especially Mexican peso, which has been strong. I mean, for the last more than a year, I believe. Okay, that's for crude. Let's take a look now on some of the US stock indexes. Firstly, the S&P 500. I mean, this one is dead. Nothing really is going on, obviously, because speculators don't know what the Fed will do, so everyone is waiting on more evidences from the Fed. But keep in mind that even if Fed is on hold, okay, if let's say on the next meeting they're expected to stay on with rates on hold, and they will be on hold, it doesn't mean actually that stocks should break to the upside. It's very important to understand that even if they are in hold, that's still not dovish view. Okay, dovish is when they are going to see cutting to where they are going to cut the rates. That's when money will be cheaper, and that's when stocks could potentially be seeing the break higher. Okay, so of course, for now, I think that it's still a little bit too soon to look for potential breakout, but technically, from an Elliott wave perspective, still I think that we are in consolidation, but not really sure if wave is finished. I mean, VIX is still holding down here, but I must admit that looks like a correction, and that if we suddenly, let's say, break 4200, we see a daily close above that level, then obviously I will immediately start looking higher into wave C. So either we are going to see more upside straight from here, or from 40,000 maybe retest. That would be quite nice if we suddenly see 40,000 drop towards 44,000, not 40,000, 4,000. Then you know that a lot of traders again would start to turn down again, pessimistic, and that's when I would be looking for potential support here. So now this is still somehow not really clear, especially when looking at this 4-hour time frame. If we are in a wave B, still wave E could see 470 retest. That's a quite key level. I posted this one. Do I have this chart here? I don't have, I believe. I posted the chart on Twitter. Okay, somehow it's not here, I believe, where I said that this is the key, very important level. Okay, so we have seen a retest of this one, bounced higher, but as long as the upper resistance holds, it's not really a breakout, it's still just a range play. Okay, here we have another wave count. Oh, that's the one. Okay, here's another wave count, which shows that this could maybe potentially be 5 waves up. You are now in a corrective phase. Now, saying that this is already completed correction, which lasted just a few days compared to this very long impulse, it's a little bit too soon for me to say that this correction is finished. So in such case, maybe we could be looking for something like this and then turn up. So again, notice the importance of this 4070. Okay, that's a very key level if going to see retested. But again, we have to see a major, very strong daily close above that previous swing highs to make sure that we are breaking out. Okay. Now, if we take a look on what I have here. Okay, so here is NASDAQ. Quite interesting, very nice move to the upside, still progressing, potentially in a fifth wave. But I mean, cryptos are turning to the downside, are in a corrective movement, not following this NASDAQ 100. So I'm really curious to see what will be the correlation, what will happen when these two are back. So looking here at Dow Jones, maybe this one is a little bit clearer. You have a very nice bullish pattern here. So you have impulse here, corrective drop, broken channel, now in a correction. But still, we could see potential lower, slightly lower support before this market kicks in. Even if we'll see a reversal lower, that should be from a higher prices, in my opinion. So if I look maybe a smaller time frame, maybe label this the wave count for you real quick. So this would be something like that. So we have 5 waves up, and after these 5 waves, I would be expecting ABC setback. So again, I think that support could be a little bit lower. Okay, but I am expecting more gains while the market is trading above that level. So this potential lower wave C here could be equal to wave E on the S&P 500. Also, maybe looking at small caps. This is nothing really clear here. Here the picture is a little bit different. Not really good in my opinion. This looks like some kind of a consolidation. Watch out for potential. Now, if you're bullish on this one, maybe you will have to wait a little bit longer for this one to unfold. This whole drop, maybe it's still going to see a retest of this 2023 lows. But in the second part of this year, I believe that all of those could be much, much higher. Jens, would you check your fingers if you're able to push the like button to support? Yeah, thank you very much for your support. Definitely, if you are first time here on our channels, make sure to subscribe to our channel, to leave us a commentary, to press a like, and that way you will show me your support, and I will make sure to share more of those videos, of course, in the future, because this feedback shows me that that somehow this is helpful for you, obviously. So thank you very much, Oleg. Okay, now what I have left here, gold and silver. So looking at gold, we are just trying to fail here once again at near the all-time highs, but I think that we are now in a minor consolidation phase, and the reason is here where I can see some not really bearish impulses from the high. So if you don't see impulses from the high, that usually represents a potential correction. Could be maybe deeper ABC, okay, if for an alternate count, could be a flat, could be even a triangle if we will hold this 1970. So in either case, I think that this is the correction and that we could see potentially more upside, but we will have to wait a little bit longer before this will complete. But overall, as I said, already discussed in one of our webinars in the past, I said that if really we are going to see maybe yields to slow down to stop here, maybe even turn down, then this will be the bullish case for gold, in my opinion, based on the past cycles. Now let's take a look also on silver. Silver is coming back to the downside to this major trend line that was broken here back in March. So this trend line could be retested. Everyone is watching this trend line. So around 23, 24, that's the area that should hold. Okay. So next week will be very important for silver, for metals, maybe in general. You want to see a recovery from that levels to make sure that bulls are still alive. For now, when looking here, it's pretty strong drop, could be still some kind of a flat formation, but not really clear. Maybe even bearish impulse could be playing out here. So definitely this very big daily trend line support, as I said, 23, 24 area, that's going to be the key for the bulls. Okay, you have to see a bounce from that zone. If not, let's say that we just continue lower towards 22, then I think that something else is going on and we will have to wait on these big ranges to play out for a little bit longer. Now let's take a look also on cryptos real quick. I think fifth wave is over in gold. Yes, it could be. I mean, if we look at the silver and respect that silver could potentially see much more weakness, if we really are going to see that drop below 23, then yes, maybe even gold will try to follow at the same time. So we'll see how it unfolds. But for now, it's a little bit too soon to say, because I don't really have, or I don't really see these 5 waves down. Simple as that. And after all, if you're just trying to stick with a simple analysis, I mean, as long as the trend is up, it's always easier for me to label each drop as a correction, especially if we have drop only in 3 waves or in 7 swings. Now let's take a look. Let me check my notes. So cryptocurrencies, as you know, are in a corrective retracement, and I've been sharing this chart a few weeks back. I said when we have seen this broken trend line that probably we are stepping into a deeper correction, which is now in play, and probably we are trying to find testing the first support here for wave C. So it could be pretty interesting, should be pretty interesting weeks ahead. But I'm not, as I know, summer months are not really good for crypto. So I'm just worried if maybe we'll just keep ranging here. But overall, we still have 3 waves down. So who knows, maybe we'll see a bounce. It's definitely worth to watch. Looking at, as I checked earlier, AMD stock and NVIDIA, those are all very strong. As we said earlier, NASDAQ 100 is also at the highs, but it's concerning when you see that crypto market somehow is not following. Okay, so maybe if we'll see still extension higher in those stocks, then maybe cryptos could potentially try to catch them with a delay, but we have to see that support holds. If you look at Bitcoin, we so far have 3 waves to the downside. We were tracking this bearish reversal after 5 waves down here, then consolidation for a triangle, and now we are headed lower into wave C. Actually, we are already the first supports here, around 26,000 is the area. Okay, so what you have to see before maybe pulling a trigger, of course, it depends what kind of a trader are you. I usually will wait on bottom to 4, because that's how you will exactly know where are you wrong, or simply put, where your stop loss should be placed. Okay, if you are in more intraday trader. So you want to see maybe 5 waves up back above the previous swing high, which latest one was around 28,000. So if you see 5 waves up, this level broken, and then stable price action, not just, let's say, an hour reaction to the upside then to the downside, but a stable price action, then of course you may be looking for potential long opportunities on the long side. So why it's important to stick with confirmations and wait on them, because you never know if market will really find a support here, or maybe will drop towards 24,000. It will be much easier play. Of course, that's, I'm talking for the short term or maybe swing trades. It's something else if you're maybe more like a longer term investor. Obviously, maybe that pullback really doesn't matter for you at all. Now looking at also at the Ethereum. Okay, so now at the Ethereum, again, we have also very similar price action, waves A, B correction, and now wave C. Now, in a wave C, in a free wave corrective movement, you want to see that wave C will stop somewhere around the lower parallel trendline support of these corrective channels. Because if this is corrective channel, you want to see this trendline support to hold. Okay, so you want to see something like that, a bounce away from it. And then this would be first evidence that this was really an ABC drop and that we are headed back to the upside. Because if on the opposite side, this trend line is broken decisively and you see continuation lower, then usually this will be indication that this is an extended lag. And then this could even become wave 3 rather than wave C. So that's why, again, it's very important to keep an eye on potential confirmations. Okay, so I think that very nice support is not far away. 1650, 1700, that's the area to watch. But again, you want to see probably 5 waves up, let's say back above 1890, 1900 maybe, and that's when you could potentially look for, I will potentially look for longs, while the market will be trading above formed low, of course. So I will keep a close eye on this one as well. We have some very beautiful price structures so far, but if I say that this is a support, it doesn't matter. It's not necessarily that support will really hold. I want to see that market proves to me that this is the really support that matters. Okay, we want to see a respond away from it. Okay, because if dollar, let's say, suddenly will just rally much more, as we discussed earlier on the euro dollar, Kiwi, all of those looks very weak versus the US dollar. And if US dollar will stay strong across the board, then you know that this could easily impact, will have an impact on cryptocurrencies as well. Now, finally, someone asked for dollar versus Turkish lira. We're tracking this one not so regularly lately, but still, I mean, you are in a very strong bull run. The inflation is a big problem, as you know, in Turkey, and it looks like that still this may not last anytime soon. Even if we are looking at the fifth wave, you never know how far this can extend. Looking at here at the short term, we could potentially see some limited ups. Maybe in the summer months could potentially slow down, and then we see a new consolidation. But I really do not see any kind of strong price action or conviction that I would say that this bullish run is coming to an end. I know that we are potentially in the fifth wave, but this market is, as you know, very, very sensitive. So it could easily extend much higher. So just be careful. But obviously, at some point, we will see reversals, but I'm not really sure what has to happen this to materialize. I'm just afraid that even if we see some attempts of to the bearish side, that could be just temporary, like each previous cycle. Okay. Okay. So what else? I believe that someone asked for EURCAD. We check the silver, or am I wrong? I'm watching this delayed. Okay, no problem, Jason. Recording is up anyway. So EURCAD. Someone asked for EURCAD. I believe I saw somewhere. Okay, so what about EURCAD? Well, on the daily chart, looks like a very nice 5 waves up. Now we are, I believe, in a corrective phase, and this somehow maybe is going very nicely with the euro dollar. Obviously, low last year, now trying to also to turn to the downside for a correction. So watch out for more sideways price move. Maybe even back to this wave of 2 lesser degrees. 1 lesser degree was here, but since this drop is still very, looks like a first leg of a correction, I think that we are headed even lower. So CAD can do much better, maybe even if the US dollar will stay strong. But keep in mind that this EURCAD, like all of those crosses, EURCAD, Euro Aussie, Euro Kiwi, when those are in bear trends, usually that's when stock market is in risk on mode. But we are not seeing stock market breaking higher yet, so this one can be a little bit tricky. However, if we will see stock market trying to fly higher, crude oil as well, then EURCAD will, in my opinion, be much lower, much deeper correction will follow. Okay, because obviously commodity currencies are much more linked to stocks like the euro, for example. Okay, traders, I hope that you enjoyed this presentation, this video. So once again, please support us, give us a like, subscribe to our channel. If you're on Twitter, if you saw a tweet, please retweet us, whatever you want, just to support us, and I will make sure to make more of those presentations in the future. Okay, traders, be careful, trade well. Keep in mind it's Friday. Don't rush with any trades. There will be new opportunities next week. We have seen some nice extensions in dollar strength, as I showed you earlier. So I think that pullbacks, if things will not dramatically change till the end of the week, I think that next week there be some new opportunities. Traders, have a good day. Enjoy your weekend. Bye.